welcome everyone to Global Markets Radio Daily Recap. I'm your host, Andrew Spanton. Tuesday, June the 26th, 2012, 4 p.m. Eastern. I guess you're wondering what you're looking at. A little change up. Yes, I decided to monetize the videos with YouTube. I'm sorry, those of you that have been my long-time freebies. But hey, this will give you an impetus to try my premium service, which my members right now are watching it live with no ads. Oh, baby. I hope it's not too annoying. I hope I don't lose my very few, but my solid listeners. No real follow-through, obviously. But I'll tell you, the yen's coming through again. What was that? I'll tell you what it is. And we're going to start talking about today's rant. As far as the S&Ps are concerned, I think all eyes are on Thursday. That's going to be the big elephant in the room. Healthcare, EU. All we're getting is headlines. Merkel still stubborn. Monti threatening to resign. I mean, the soap opera going on in Europe. That's what it's all about. But again, I believe, like many other analysts, that nothing is going to get done. Anything they agree to do is going to be years down the road, end of the year at best. And nothing's going to happen. And that's not good. Because as we see, U.S. economic numbers continue to weaken. Richmond Fed, consumer confidence all weaker than expected. Case-Shiller, yes, the housing market showing signs of life. Hey, tomorrow's number on home sales, maybe it's going to be better. It was only down 5.5% last month. So we certainly could rebound, but the 2-month average ain't good. And it is summer, and June, I believe, is May, June. Springtime is a good time for the housing market. So I would think that number is going to be good. Look at the dollar index here. Certainly a nice reversal, but I don't see it collapsing. I do see it made new highs, did not make new lows from previous day. So while the rally was somewhat decent, not very impressive. Not by a long shot. We got German CPI data coming out. And again, I'm talking about last night, London. Inflation report certainly does not look very good. Deflation. To me, the real story was Japan. Japan was the real story last night. Unbelievable, in my opinion. A little bit unexpected. I didn't think it was going to pass. Japanese agreeing. And again, this dollar index not looking very good. Looks like it might come in a little bit, but I'm not looking for a meltdown. No way. We need to get serious news. And I don't think that's coming until Thursday. So we're going to be jobbing back and forth, I think. I don't think the S&Ps take out 1360 on no news. 1320 close. We might bounce to 1330, but I don't see us going higher. Dollar yen. The Japanese agreeing to a 10% increase in sales tax. Now, why am I bringing this up? Well, dollar yen sold off on that. It seems like when a country is willing to exhibit austerity measures or measures that are going to pay down their debt or take less debt out, their currency benefits. And we saw the yen have a nice rally. If the stock market didn't come back the way it did, it was going to be even better. Dollar yen did make a little bit of a comeback, but I think dollar yen comes back down to here. 78.60. Let me tell you. So Japan now goes through almost 2 decades of nothing, no growth, contraction, deflation. And they're in debt double GDP. They're savers, so they can do that. But still, they've done every stimulus, and they bought bank shares. They actually own physical shares of the banks. They have done so many different measures to get their economy going. Yes, they have an aging population. I understand that. But they weren't in as much of an aging population 10 years ago when they were still going through their problems. And I think that, in my opinion, what the U.S. and the rest of the world is going through right now is Japan 2.0. Absolutely 100%. A little different, you know. Maybe this one's pepper, the other we're salt. We're still spices. It's still the same thing. It's a spice. You know what I mean? My point being, if the Japanese are now forced, after all their stimulus to get their economy going, to give in and now go for revenues on this sales tax move, which I think should have been 10 years ago. But it was going to halt growth. I don't necessarily think so. You're going to buy your iPhone no matter what the sales tax is. You know you're going to. It's going to hurt some things, but certain things will not change. Gold looks like a nice reversal. Again, I think this, when we have possible stimulus, gold goes up. Possible austerity, gold goes down. And this was big. I think people making light of it, but you certainly had some members of the Japanese finance ministry threatening to quit over this. Sterling looks good. I thought the inflation data hearings was more on the dovish side. I was dead wrong. I don't see where they possibly see any inflation. I think, again, deflation. We get King coming on, and King is a big-time dove. That's on Thursday. But Sterling looks like it might want to go higher. I think the numbers tonight are going to suck. I'm looking to fade it. I don't think we're going to explode through 158. I think if I can get 157 and change, we get a nice reversal. Absolutely. Again, durable goods are going to be falling off a cliff. They were down 0.9%. They look for a rebound on the core side of 0.9. I look for 0 or possible negative number. Negative. So back to Japan. So Japan is now finally admitting that all this printing of yen and issuing of bonds didn't work. Keeping ZIRP, zero interest rate policy, for so long. And now they're still going to end up having to do a sales tax. Why should the U.S. or the G20 repeat their mistake and go into the same debt they're in, only to then, in the end, have to come to the U.S. taxpayer? Once again, kicking the can down the road. This is where there is a major fallacy. And the difference between Japan and the United States is prevalent. They save. They have money under the mattress. The average U.S. person does not. Of course, 10% do. But on average, the Japanese are incredible savers compared to the average United States citizen, and it would be disaster beyond proportion. But that's where the money should have come in. That's where the government should come in as a safety net in that respect. But at some point, if the road that the U.S. is going down, and Europe, they can't afford to be in debt like the Japanese. Japanese current account surpluses, making money, exporting. They did that for a decade. That money's in the bank. So while they owe so much money, they still have the backing to do it. So my point again, if eventually the United States is going to have to tax the average American, where self-sacrifice, why not do it now? Why go in debt another $1.6 trillion? Why? And I think that this election might be about that. And you know what? Sometimes you have to go through some pain in order to get yourself in a better situation. Why can't the government workers take a one-year, one-time 10% tax income cut? They make $70,000, they make $63,000. 1 year. Shared sacrifice. Sales tax. Everyone's tax goes up. And you know what? Those at the top, you know what? Maybe they could pay a little bit more too. So everyone feels like they're contributing. That's called nationalism. We got to bail all of us out. Everyone in their own way, 95% of the people in the United States benefited from the real estate boom. Real estate trickles down to almost every level of society. The broker, the appliance manufacturer, the landscaper, come on, the plumber. It's pervasive. And so that should mean everyone has a share. Even if you're on hard times now, you benefited for a long time. And I think some sort of a sales tax, a VAT tax, shared sacrifice. But to go into another $1.6 trillion in debt this year and the next is absolutely economic Armageddon and disaster down the road, where you'll just have to be paying more. Heaven forbid interest rates go up. So look at this euro dollar. I'm sorry for the rant, but I thought the Japanese news was pretty significant. I think that's why you saw dollar yen come in. I think it's pretty significant. So this euro dollar, it may have bottomed for now. We weren't looking for that much last night. Euro yen came in nice, follow through. And again, halting here. I think we probably could bounce a little bit. I don't look for an explosion unless there's any big news. Maybe get up to 125.70, 90 in that zone. But again, U.S. durable goods are going to be terrible. If they rally in the morning, I think we sell off after the U.S. numbers. I don't see how any of the numbers coming out tonight. London realized sales, it's a fade. Aussie, Kiwi, sure, they came back nicely. Aussie getting above previous day high, that's bullish. Maybe we'll get back up to here, but I think they're a fade. Again, this is all barring any major news. Like guarantee of deposits of European EU banks. Boom. Something. Eurobonds. I don't think Eurobonds are going to happen, but if they could just do some sort of fiscal union where they guarantee deposits, it would solve a big problem. Capital flight. Even if, let's say Greece, all right, your bank says even if we go to the drachma, you'll get your euros back, converted. If you want euros, you can have euros. If you want drachma, you can have drachma. Kiwi certainly acting strong. Remember that GDP number is big. Again, Aussie Kiwi looks like the one. The yens, I think they were a 2-day trade. So I look for possible bounce back. Aussie Kiwi had a nice hammer time here. I look for that to pop back up. Maybe Aussie comes back a little more. Dollar Canada. Certainly breaking this whole flag we like very much. I still like it on a pullback. I don't think it melts. Again, durable goods are going to suck. But if we do get that housing number, that's good. You could see Canadian dollar benefiting dramatically from that. So that's a big number for the Canadian. Dollar Swiss. Again, the one I like short. This is the one. It's a good hedge. I don't see it exploding. Again, this is a safe haven play. And Euro Swiss at some point is going to break. But again, to me, other news is going to start to dominate. Other news is going to be just as important. For example, there are new reports coming out that there are British special forces inside Syria as we speak. They may have been there for a little bit, but they are actively engaged, apparently. This is big news. Because in my opinion, Bashir Assad is not going down alone. He's going to bring the whole Middle East with him. He has said, if I go down, I bring down Lebanon and Israel. And he can do it. And again, this Turkish situation with the jet fighter getting shot down is not good. Not good. This thing is on the verge of blowing up. And look who we have as president. Good job. I pray. I really pray for our forces. Heaven forbid something blows up In the Middle East, we have too many forces, too much assets at risk for sure. So again, getting back to the S&P, an inside candle today, our previous day low or high. I could see us getting up here and then reversing, so 1335. And then we're right back to terrible numbers, praying for the EU to come up with something. Excuse me. And then Obamacare is going to get taken out to the woodshed and shot. Again, storm clouds on the horizon. Debbie did squat, but I don't know. Not even going to go there. She didn't come close to Dallas. She hung it right. Andrew Spanton, again, look to fade the strength. Maybe go from the long side for a little bit. But at the end of the day, I think the risk is to the downside. Bad news coming. Follow me on Facebook, Voice of Forex. Follow me on YouTube. And again, what are you going to do? You got ads now. Go premium. No ads. Oh, baby. Andrew Spanton. I'll give you crude at the end of the day. I still think it looks terrible, but crude, something in the Middle East. Boom. To the moon. Share my video, please. And the more clicks, the better. Come on, click away. Help a guy out. The only voice you'll ever need. Try my service. 1 week free trial. Email info@globalfxllc.com. The only voice you will ever need who truly loves to make you money. Choppy night ahead. Fade the strength. Bye-bye.